Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the daily time frame, where we have a finished three-wave corrective structure and we look for continuation to the upside impulsively. Here we have a wave 1, 2, 3 looking for 4 and one more push to the upside in a wave 5 to then finish your green wave 1. After this one is finished, we're looking for a deep, sharp corrective structure to the downside in a wave 2. Most common target for your wave 2 is the 05 to the 786 Fibonacci, taken from the low to the high of your green wave 1. If the green wave 1 can make it till a 70.9k, which is impressive resistance, then the common target area for your wave 2 is between 62.2k and 57.2k. Currently, in this move towards the upside, you can see that I have a white box here for the white wave 4. This is the price action of a wave 4 of a lower degree when we count this 1, 2, 1, 2, 3, 4, 5, 4, 5. Therefore, important support for this wave 4 is between 63.2k and 66.1k, after which we then look for a final impulsive structure to the upside, 5 waves, in this wave 1. I also like to keep an eye on very simple support resistance areas, and you can see that I have 3 on my chart in this range. The lower support area now is in confluence with the target area for your wave 2 between 59.2 and 60.3k. The one in the middle is in confluence with the target area for a wave 4 between 64.5k and 65.2k. And then you can see that the higher resistance area here is quite close to a potential target for this wave of 5. I have this box here between 71.2k and 72.7k. So therefore, it could be interesting to still stick around in this range for a little bit longer, retesting the middle, then move towards the upside, move back towards the downside, and then move up, meaning we continue this range sideways for a bit longer before then eventually breaking out. The bullish scenario on the 4-hour time frame is an unfinished impulse to the upside, starting with a double 1-2. A double 1-2 is more common than a leading diagonal, so therefore the probabilities initially would be on the side for a double 1-2. Here we then have the higher degree impulsive structure 1, 2, 3, 4, 5, with inside wave 3 a finished impulsive structure 1, 2, 3, 4, 5. The most common target area for your wave 4 is between the 236 and the 0.5 Fibonacci, taken from the low of 2 to the high of your wave 3, giving you a target between 64.4k and 60.9k, with the invalidation being the 618 at 59.3k. Preferably, your wave 4 of a higher degree is ending around the price action of a wave 4 of a lower degree. So what you could do is simply pull a box from the start to the end of your wave 4 and drag it to the right, and you can see that then your target is 63.2k to 66.1k, but this lower half over here has confluence with the Fibonacci target area for your wave 4, which makes that the most interesting support area for your higher degree wave 4, and then look for support for your wave 5. I also added a blue additional support box because there's a couple of confluences here between 63.6k and 64.8k. Inside this wave 4, we are then looking here for a flat structure, and a flat is a 3-3-5. So we then look for a 3-wave A, 3-wave B, and a 5-wave C. And this wave C should be an impulse, but then after C is finished, we finish that wave 4 that I just spoke about, look for signs of strength for a final 5-wave impulsive structure to the upside. In this case, we then have over here our finished A, which by itself is a flat structure, A, B, C, which is absolutely possible. Then we have a zigzag family structure to the upside in a wave B, which is common for a wave B, hitting the most common target area for a wave B, which is the 1.236 to the 1.38 Fibonacci, taken from the start to the end of your wave A, giving you a target between 68.3 and 68k, which has been hit, as you can see. And then we're looking for an impulse to the downside, where we're working on a wave 3, 1, 2, and preferably continuation to the downside, with volume increasing locally as well. After wave 3, we then look for a range in 4, one more drop in 5, and then finish your wave C. The common target area for your wave C is between the 1.618 over here, 65.5k, to 64.1k, with the 2.618 at 63.7k being an extension target for wave C in a flat structure. The bearish scenario on the 4-hour time frame is already a finished impulsive structure. Previously, I was always looking at the potential for an A, B, C, but your wave C now is so extended, and also this range in the middle doesn't really fit with any wave 2s that we have over here. So it makes a lot more sense to now look at a finished impulsive structure as the bearish scenario, where then your wave 1 or A potentially is finished, and you look for a move to the downside in a B or 2, and one more leg up in a wave C or 3. So at the moment, we then have 1, 2, 3, 4, 5. As mentioned, a leading diagonal does have lower probabilities than a multi 1-2, so that is something we have to keep in mind with the price action here at the low. And something else I like to talk about is this wave 5, because a wave 5 has to be a 5-wave impulsive structure, 1, 2, 3, 4, 5, no overlap allowed, right? And then, yeah, okay, we can count like 1, 2, 3, 4, 5. But can all of this, right, be a wave 4? Now, it's quite interesting to look at this by only looking at the final structure to the upside. So if we are aiming to finish a wave 5 here and then finish a bigger impulse and look for a bigger correction to the downside, then this last move to the upside has to be an impulsive structure, because a wave 5 has to be an impulsive structure, either an impulse, ending a diagonal, or you have a multi 1-2, 1-2, 1-2, 3, 4, 5, 4, 5 to then form a bigger impulse. So in other words, this move up has to be an impulsive structure. Now, let's then cover these scenarios one by one. If this is an impulse to the upside, we want to see a 1, 2, 3, 4, 5 wave structure, no overlap allowed between a wave 1 and a wave 4. We have overlap here, we have overlap here, we have overlap here. There's overlap everywhere. And even if you try to work with extensions like, okay, 1, 2, 3, 4, 5 extension, you still have here, and that is then your bigger wave 1, you still have overlap here. So all the overlap is killing the probabilities for a normal 5-wave impulsive structure to the upside. Then we have to think about a diagonal, and we do have overlap. So, okay, we can think about a diagonal, but here your wave 3 actually is relatively short. You can see that if I take a trend-based fib from the low to the high of 1 to the low of 2, the 1-to-1 is here, meaning your wave 3 is shorter. Okay, that's what we like to see in a contracting diagonal. But if we then also take a trend-based from the low to the high of 3 to the low of your wave 4, then you can see that your wave 5 is longer than the 1-to-1. So that is not allowed in a contracting diagonal, and also not in an expanding diagonal, because your 3 is shorter than 1. So that doesn't really work. And then we still have the price action here that we have to cope with if we want to somehow count all of this as a diagonal. So it doesn't really make it high probabilities. And then for a multi 1-2, well, in a multi 1-2, we want to see 1-2, 1-2, maybe another 1-2, and a big wave 3 towards the upside. But now we're here, right? So the probabilities are low that we have a multi 1-2. So in other words, counting this move towards the upside is difficult, right? If we follow the rules of Elliott waves, which means that the probabilities do increase for a corrective structure to the upside, meaning a zigzag family structure looking at the angle of this move towards the upside. And the fact that we can then give higher probabilities to this move to the upside being a corrective structure, it automatically increases the probabilities for this high to be I like to call it a fake high, meaning it is not a wave 5, it is a wave B or a wave X, meaning the move to the downside is a wave C or a wave Y, which in turn increases the probabilities for price to still at some point move back up to take out the highs here and then finish a wave 5 higher. So this is how the probabilities of the 5-minute time frame can influence higher degree counts, because this having a higher probability of being corrective increases the probabilities for a potential flat here where the high is a B, not an X, and then look for a C down, which in turn increases the probabilities for a higher degree 4-hour time frame wave 4, and still another 5 to the upside to still break this high at some point, right? Very, very interesting indeed. If locally we pull two simple support resistance areas, then you can see this one was a resistance, a resistance, a resistance, a support, little bit of support, and now broke, meaning this is now resistance again between 67.5k and 67.7k. To the downside, we have the support area here, support, 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 and this one is sitting between 66.2k to 66.4k. The bearish scenario on the daily time frame would be an extension of this range in time, meaning a longer corrective structure in a WXY or a flat A, B, and then a wave C towards the downside. It is most common for wave X or wave B to be a zigzag family structure, meaning at least a 535 ABC. But that means that we would still count an impulse to the upside here, eventually expect a 3-wave retracement, and then another impulse to the upside. So it is mimicking the bullish scenario where you look for a 1, 2, and then a wave 3, but here you then look for an A, B, and then a wave C. The most bearish scenario for a double 1, 2, 1, 2, 1, 2, and then a wave 3 down is very low probabilities, and with price locally moving to the upside, it doesn't really make sense to look at that at the moment. So if you then finally look at the probabilities, then on the daily time frame, the bullish scenario has the higher probabilities compared to the bearish scenario, and on the 4-hour time frame, the bullish scenario also has a higher probability, meaning we're working on a wave 4 here locally for a 1, 2, 1, 2, 3, 4, 5, 4, 5, and then the bearish scenario, a finished impulse, is currently on the number 2 spot. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.